Hello everyone, I'm Leela Prabhugaonkar and I'm from the Bodhi Academy. So today we'll see Unit 8 of Economics for Standard 12, that is Government Budget. Okay, so before going to government budget, we should know what is the difference between economics and economy. Okay, so economy, that is ECONOMY, and economics, ECONOMICS. Okay, so this economics includes the theory of market employment. So basically this includes all the theories of market, employment, etc. Okay, and economics, this is basically a theoretical subject, okay, which covers a wide range of topics. So economics is a theoretical subject, okay, which covers a wide range of topics. Coming back to economy, economy is economy is basically your practical application. Okay, so practical application. So here we study the economy in a practical way. Like we say, whenever we study economy of a particular country, we say that it's a Indian economy or China's economy or USA's economy. Like this we do. So basically, we study all the practical aspects of a particular country. Okay, so that is economy. So let's say India's economy, or we can say China's economy. Okay, so coming back to the government budget chapter, here government budget, this is basically a macro, this part falls under a macroeconomics. So basically we are dealing with macroeconomics right now, which covers a huge topic, a vast range of topic, including inflation, okay, unemployment, budget. So budget is nothing but just a statement of the government receipts and government expenditure. So we can say that budget is a statement, basically a statement of government receipts and government expenditure. Okay, then so government budget is nothing but a statement of receipts and expenditure of the government for the financial year. A financial year starts from 1st April to 31st March. Okay, so it's nothing but a statement of expected receipt and expected expenditure of a government during a particular financial year. So financial year starts from 1st April to 31st March. Okay, 1st April to 31st March. So it also includes reports on its financial performance over the past on years. Okay, then objectives of government budget is very important. Here it includes a redistribution of income and wealth. Like here government focuses on equitable distribution. Okay, the wealth is distributed equally, because it is a sign of social justice, which is the principal objective of any welfare state, as in India. Okay, so the first point is redistribution of income and wealth. Then the next is reallocation of resources. Reallocation means where those resources are again getting used. Okay, so private enterprise, what is the main focus of the private enterprise? We can say that private enterprises focuses basically on focuses on profit maximization. Okay, whereas public enterprise focuses on social welfare. Okay, so this is what here we have to understand. Like private enterprises will always desire to allocate resources to those areas of production where the profits are basically high. Okay, so it is possible that such areas of production may not promote a social welfare. Okay, but through the budgetary policy, through the policy of the government of a country, they allocate the resources, they distribute the resources in such a manner that that should be a some a social justice to the people, and that should be a social welfare. So there is a balance between the goal of profit or this allocation of resources in a manner such that there is a balance between the goals of profits and like cigarettes, whiskey, and all this is discouraged. Okay. On the other hand, production of socially useful goods like khadi, these are encouraged. Okay, through subsidies. Then the next part is economic stability. Economic stability, this plays a free play of market forces, or the forces of supply and demand, are bound to generate trade cycles, and this is also called as a business cycle, which refers to the phases of recession, depression. So business cycle includes this: recession, depression, recovery, and boom. So the government of a country is always committed to save the economy from the business cycle. Then here government tries to manage the public enterprise, and how they are going to manage the public enterprise. The budgetary policy of the government shows interest of the government to increase the rate of growth through public enterprises. Growth through public enterprises, this focuses on social welfare, because as I told, public enterprise basically focuses on social welfare rather than profit maximization. Okay. Next. Next very important point is structure of the budget or components of the budget. Now, budget has got a two broad components. The first part is revenue budget and the second one is capital budget. So, before learning to these points, we should know what are the different components of government budget. So, components of government budget, um, how this is distributed. So government budget is further classified into revenue budget and capital budget. Okay. Okay. So revenue budget and capital budget. So revenue budget, here there is no creation of any asset and liabilities. No creation of asset and liability. Capital budget, yes, there is a creation of asset and liability. Creation of asset and liability. Okay. Now, under revenue budget, there are revenue receipts and revenue expenditure. Revenue receipts and revenue expenditure. Okay, so revenue receipts are further classified as tax receipts and non-tax receipts. Okay. Revenue receipts are further classified as tax receipts and non-tax receipts. Revenue expenditure is further classified as planned revenue expenditure and non-planned revenue expenditure. Okay, then your capital receipts, the capital budget includes capital receipts and capital expenditure. So, capital receipts are the receipts of the government from these investments and borrowings. So, here 2 points we have to remember, that is disinvestment and borrowings. Second one is borrowings. Capital expenditure, again it includes your planned capital expenditure, and non-planned revenue expenditure. Non-planned capital expenditure, sorry. Non-planned capital expenditure. So this is basically a components of government budget, wherein we have to study revenue budget, in which there is no creation of asset and liability, and capital budget, there is a creation of asset and liability. Okay, so components of government budget includes revenue budget and capital budget. So revenue budget includes this: revenue receipts, and revenue expenditure. Then capital budget includes capital receipts and capital expenditure. Okay. Then revenue receipts, as I told you, there is a no creation of asset and liability. It do not create any liability, or there is no reduction in asset. Okay, so this is basically a characteristics of revenue receipts, which are as follows: these receipts do not create any corresponding liability for the government. A tax receipt, for example, it is a revenue receipt because there is no creation of liability. Okay, then these receipts do not cause any reduction in asset of the government. For example, like Maruti Udyog causes reduction in the asset of the government. These are therefore not to be treated as a revenue receipt. Okay. Then, coming back to the revenue receipts, this part, revenue receipts are further classified as tax receipts. Okay. Tax receipts, here we have to understand there are different types of taxes. Okay. A tax is basically a compulsory payment to the government, and tax receipts includes progressive tax, regressive tax, ad valorem tax. Okay. So progressive tax. Second one is regressive tax. Third one is ad valorem tax. Okay, so now Progressive tax. Progressive tax is basically this increases with the increase in income. Okay. So progressive tax, how we have to understand is, as income rises, tax rises, and this create a less burden on poor. So progressive, okay, I'll write over here, progressive tax. This comes under tax receipts, okay, tax receipts. So the first one is, um, if you want to understand this tax, first we'll see there are two types of taxes, okay, which is there. So tax receipts are your direct tax. There are two types of taxes, direct tax and indirect tax. So direct tax is basically your taxes on household and firms. Taxes on household and firms. So this includes your wealth tax, your income tax, okay. But your indirect tax is basically includes GST, goods and service tax, okay. Now goods and service tax is levied on goods and services, okay. Beside these taxes, there are different tax which comes under these tax receipts. These are, the first one is progressive tax. So these are different kinds of income taxes what we'll be studying. That is progressive tax. Now progressive tax, as the income rises, tax also rises. Okay. As income rises, tax rises and this creates a less burden on poor. There is a less burden on poor. Okay. Second one, just the opposite of progressive tax is regressive tax. Regressive tax. Regressive tax, as income rises, tax falls. As income rises, tax falls, and this puts a burden on poor. Puts burden on poor. Okay, so this is called as regressive tax. Okay, as income rises, tax falls, and this puts a burden on poor people. Okay, so these are basically your tax receipts. So progressive tax we saw, regressive tax, and now we'll come to value added tax. That is a value added tax is like for the each stages of production. Okay, um, each stages of production, there is a the tax is added. So value added tax is an indirect tax which is imposed on value added at the various stages of production. Value added refers to the difference between value of output and intermediate consumption. Okay. Then this is what we saw, direct taxes and the indirect taxes. So the burden of direct tax has to be borne by the particular person, right, on whom it is to be imposed. So these are the different types of taxes: income tax, corporation tax, gift tax, wealth tax. These are some of the examples of direct tax. Indirect tax, it just shifts the burden to another person. Okay. Then After this, let's come to non-tax receipts. Okay, non-tax receipts are non-tax receipts. Non-tax receipts are nothing but uh, there are different types of non-tax sources for the government, and this includes your fees. Then second one is fines. Third one is S-cheat. Fourth one is special assessment. Fifth one is your grants and any donation. Okay, grants and donations. So these are the various non-tax sources for the government. And fifth is income from public enterprise. Six, income from public enterprises. Okay. Now we'll see with regards to fees. Fees is a payment to the government. Like we pay to the government, no? Like if we want to get a certificate, like if we want land registration certificate, or if we want birth registration certificate, land registration, birth registration, birth certificate. Okay, these are the fees which we pay to the government. So fee is a payment to the government for the services that it renders to the people. Then fines, why do we pay the fines to the government? If we are violating any rules, then we'll pay the fines. So violation of any rule. Okay. So fines are those payments which are made by the lawbreakers. This is for the lawbreakers to the government by way of economic punishment. And its actual aim is to force the people to be law abiding. Okay, means it tells the people to follow all the rules and regulation, and is not an important source of revenue for the government. Then ash sheet. Ash sheet is property left out. If there is no legal heir for that particular property, then it is ash sheet refers to that income of the state which arises out of the property left by the people without a legal heir. So ash sheet is basically a property which is left without a legal heir. Okay, this is called as S-sheet. That coming back to the spatial assessment is it is another source of non-payment revenue to the government, non-tax receipts, what we are studying currently. So spatial assessment is that payment which is made by the owners of those properties whose value has increased, appreciated due to the developmental activities. Which are the developmental activities of the government? Like due to roads, infrastructure of roads, okay, then bridges, etc. Then income from public enterprises, like which are the public enterprise? Like whatever the profit government gets from the public enterprises, like Indian Railways is there, okay, whatever the profit they get, this is one of the non-tax sources. Then or any fertilizer, Nangal fertilizer factory, Indian oil. So these profits of this enterprise are a source of revenue for the government. Then the next is grants and donations. Grants and donations, it is received by the government, like for example in the event of some natural calamities like earthquake, flood, famines, drought. During the this basically a war time, citizens of the country they often make some donation and grants to the government, and these donations and grants are also received by the government from rest of the world. Okay, so this is with regards to tax receipts. Tax receipts, which comes under revenue receipts. Okay. Then capital receipts. Capital receipts. Um, okay. The next point is with regards to capital receipts. Capital receipts are the monetary receipts, okay, which creates a liability to the government. This capital receipt, which create a liability to the government, and it causes a reduction in the asset of the government. Okay, so capital receipts creates a liability. This capital receipts receive from this. So loans by the government are a liability, and these are two sector enterprises to the government, briefly called privatization. And money received through these investment is treated as capital received because it causes reduction in the asset of the government. So capital receipt, which is a part of capital budget, it includes disinvestment and borrowings. Government is going to borrow from different sources. Okay. Further, capital receipts are classified as recovery of loans, borrowings and other liabilities, and some other receipts. Okay. Then expenditure. Uh, Budget expenditure. Budget expenditure includes your revenue expenditure and capital expenditure. Okay, so revenue expenditure. Expenditure for the fiscal year, that is a revenue expenditure, and this revenue expenditure do not create asset for the government. Okay, expenditure by the government, like where does the government going to spend this revenue income? They are going to spend it on pensions, scholarship, so revenue expenditure. Revenue expenditure is nothing but which do not create any asset for the government, and it is an expenditure by the government on salaries, pension fund, expenditure on salaries, pension fund, then scholarship, are to be treated as a revenue expenditure because these are just routine expenditure and which do not create any asset. Okay, then the second one, expenditure on the repayment of loans. If they have taken any loans, then from this just to meet a day-to-day liability, they are going to pay this amount. Okay, so accordingly this is not to be treated as a revenue expenditure. Then the next one is your capital expenditure. Capital expenditure creates a asset for the government. Like capital expenditure is expenditure on acquisition of land or building. Okay, acquisition on land, building. Okay, or purchase of any machinery, purchase of machinery, etc. So, capital expenditure refers to the estimated expenditure of the government in a fiscal year, which either create asset or causes a reduction in liabilities. So, land and building, expenditure on machinery and equipment. This creates asset for the government, that is equity or shares of the domestic or multinational corporation purchased by the government, or cause reduction in the liabilities of the government. Repayment of loans certainly reduces liabilities of the government. Okay, so today we'll see till this much capital expenditure. For the next class we'll see plan revenue expenditure, non-plan revenue expenditure, and plan capital expenditure and non-plan capital expenditure. Okay. Thank you for watching my video.